Hi, this is Charles Rotblut, AAII Journal editor, speaking to you about COVID-19 and the market's reaction to the coronavirus. Monday and Tuesday of this week, we certainly had a very negative reaction in stock markets with drops of in excess of 3%. I realize such moves can be unnerving. Certainly the headlines about the disease are disconcerting, not only from economic standpoint, but also from a human standpoint. It's important to realize we're still early in terms of the impact. There are news reports that are factual. There's also misinformation. There's conspiracy theories. What I would encourage those of you who are interested in disease, as much as possible, try to go to reputable sources, the CDC, the WHO, medical journals such as the Journal of the American Medical Association. Try to depend on those for facts. But I think it's also important to realize what you know and what you don't know, and particularly in terms of the disease itself. In his latest shareholder letter, Warren Buffett made the analogy when talking about boards of directors to how he would never be a contestant on Dancing with the Stars because he doesn't dance well. When it comes to coronavirus, realize there's a lot of opinions, a lot of people showing up in the media giving opinions, what the impact will be. The reality is there's still a lot of unknowns. There's also a lot of statistics being thrown around that aren't necessarily the ones that are most important. For instance, the R0 number, shown as R0, that is the reproductive number of the disease. How many people one person who is infected can be expected to infect on average. So an R0 of 2 means one person might infect 2 people, who in turn might infect 4 other people. We do not know currently whether that number is increasing or decreasing. Hopefully, from a human standpoint, it is decreasing. But again, I think it's important to, obviously you want to know where it's being spread to, but you also want to accept the fact that there are unknowns. So given this, what can you do? Well, the best thing you can do from an investment standpoint is to just stay focused on the long term. Your investment horizon should not be 2 days, it should not be a week, it should not be a month. If you're investing in stocks, you should really be thinking a period of several years. The market volatility, particularly drops, is a price you're paying to realize the long-term return of stocks. There will be down days, there will be down months, there will be down years. But over the long term, you will be rewarded for sticking with the markets. Realize that even if you started investing in January 2007 or January 2000, both horrible times from a timing standpoint, you will have come out ahead with large gains in wealth if you simply stuck with a diversified portfolio and never panicked. We've also seen data on past outbreaks such as SARS, H1N1, MERS, Sam Stovall of CFRA. Other people too have noted that when you look at what the markets have done post-crisis, they've been up consistently. Past outbreaks have always resulted in higher stock returns later on, not because the outbreak itself, but because the severity of the outbreak was less than expected, and the economic damage from those outbreaks, more importantly, was less than expected. Was there a human toll? Absolutely. It's always sad. But from an economic standpoint, the damage tends to be shorter term and not lasting. Obviously, a lot of people are always worried about a reoccurrence of a Spanish flu type event. That was over a century ago. We have not seen that happen since. We have not seen evidence that the current virus is going to be at that level or that magnitude. Now, have we seen companies warn? Absolutely. We've seen Apple warn about inventory issues. We've seen Macy's say they've seen a drop in Chinese tourism leading to a drop in sales. So there are things occurring, but again, you have to realize the limits of your knowledge about, and the limits of everybody's knowledge about the extent to which this virus is going to impact the economy and also your investing time horizon. So keep your investment horizon intact. Think about the fact that you're holding stocks for a period of years, not days. If you're a retiree, it can make sense to have a cash bucket providing cash for a few years worth of withdrawals. If you're working, having a bit of cash on the side is important just for emergency situations, to protect yourself against a situation where maybe you might have a job in jeopardy, but staying focused on a long term. Now, obviously beyond the investment standpoint, there are things you can do. Most importantly, washing your hands, covering your mouth when you cough. If you're really nervous about the disease spreading, you can do things like keeping extra food on hand, making sure all your prescriptions are up to date and filled. But most importantly, just don't panic. Accept the fact that there are uncertainties. We don't know the full extent this will have on the economy, but should this follow the path of other outbreaks we've seen in the last 20 years, all this fear, all this panic, and even the impact on the economy should hopefully be short-lived. And certainly, if you have an investment time horizon of several years, it makes sense to stay invested. And if you're willing to take more of a contrarian approach, you can start looking for bargains in the market. Perhaps you have a buy list. You can also think about things such as Roth IRA conversions. If you are planning to do a Roth IRA conversion anyway at some point this year, perhaps you take advantage of any weakness in the market to do them sooner than later, because therefore you can actually convert more shares of a given stock or a given ETF or a given mutual fund for the same tax bite. So the big picture here is to really stay focused on the long term, realizing that you can't control your investing process, but not what the market does. But if you can constantly focus on your long-term process, your portfolio will emerge unscathed. Wishing you good health. This is Charles Rotblut.